So we will discuss the effects of our foreign investment on Taiwan. Actually, in the previous lectures, I discussed some of the issues regarding about the no haste and the be patient restricted trade policy. On trade, you can see that Taiwan needs FDIs. Okay, I have already discussed. Started with the East Asia first, and then moved to China. Okay, and keep increasing. Okay, in the mid 1980s, Taiwanese firms invest in traditional industry like textile and apparel and footwear and wood products. So in the early to make the use of cheap labor abroad, right? And in early 1990s, to make chemical materials and chemical products and plastic products. And in late 1990s, to high-tech industry like computers and information industries. So even the invest in abroad, we also shifting towards from traditional labor-intensive towards more capital and high-tech industries investment in abroad. And this is for the 90s. As you can see that a large share of our investment, okay, the large share of the investment is in electronic and electrical appliances, about 28%. And that number, of course, today is even larger. Okay, so about 30% of our foreign direct investment in mainland China is on these electronic appliances. But you remember, this industry actually is the leading industry in Taiwan, right? It's the leading industry in Taiwan in 90s, even today, okay? And how can we invest our leading industries abroad? It doesn't make sense, right? If this is your leading industries, the best of your industry, why you still need to invest in abroad, in the same industries? Right? You see? So what's the problem? Usually you invest abroad is by moving your relatively out-of-date industries, or we call sunset industries, right, to foreign countries, alright, in order to find a cheaper production cost over there, to keep that kind of industries surviving by moving abroad, right? That's the usual case that we see. But why we still invest and invest in the industry that we actually has the competitive advantage, the best that we have in our countries. You see the argument? What caused this? What caused this investment in mainland China? It is because, as I told you, the investment, the purpose of the investment across strait has a very important underlying forces, is the division across the strait. We invest in there is to what? Is to increase by the same industry, but we doing the intra-industry trade in the two countries. So we invest in there. For example, we invest an electronic company in there, or production factories in there, such that it can import key and components and material from Taiwan. So Taiwan focuses on upstream, and China focuses on the downstream. So even the same industry, we invest in there in the downstream processing, and we keep our upstream in Taiwan. So by invest the same industry of electric industry in China, actually reinforce the division of labor and also strengthen the competitiveness of Taiwanese firms through this foreign direct investment. So this is clear that why actually we invest in there. So that is what I'm saying, that actually there is a mutual gains from both sides through investment and trade. And this is the total investment, and this is the approved investment in electronic sectors. As you can see that in the later part in earlier periods, no investment in electronic sectors, but towards the later half of the 1990s, you can see the increasing share in IT industries investment in China. And here is the re-export from Taiwan to China by Hong Kong. That is also increasing over time for the electronic machinery and equipment. So you can see that we export more and more of these goods to mainland China. We invest more in there, but also we trade more in there, because this investment triggers more and more trade. They require more and more intermediates and key components from Taiwan. And that, of course, induces more of this intra-industry trade from Taiwan to China. Okay, and of course that will help enlarge Taiwan's exports. So this is the trade, investment-induced trade. You see, this is the export. And here, this one is Taiwan's investment shared in mainland China in IT industries. And this is the export of IT industries. So you can see how close these two lines move together. So the more we invest in mainland China in the IT industry, the more we output of those products to Taiwan, to China. Okay, so these also reinforce my underlying arguments that the investment and trade between Taiwan and China is actually reinforced Taiwan's firm's competitiveness in the international market. And then that makes Taiwan's IT industry even more stronger than before. And that is also an argument that trade with China, especially in the 90s, is not a process of hollowing out of the industries. It doesn't hollow out our industry. Actually, it strengthens the relations of division of labors across the strait. China has become the largest exporting destination of Taiwan since 2000. And a lot export has to do with our investment in China. And Taiwan has the largest trade surplus with China. In that year, 27 billion with China. Today it's more than that. And this is the export share. Okay? United States used to be our major trading partners. Okay? In the early 80s. Now the share dropped to less than 15%. Okay? And China, mainland China, 23%, but there is Hong Kong. We trade with Hong Kong. If you take these two together, it's close to 40%. Okay? So our export, about 40% of our exports to mainland China, and only 15% to the United States today. And we keep accumulating foreign reserves. This is export, import, and this is the trade balance. United States used to be our major contributors for trade surplus in the mid-80s, but that number started to drop. Still remain important partners, but however, if you compare with China, now China is gaining their share. And how about the argument on productivity? Right? We see these investment and trade relations between Taiwan and China, and it helped the IT industry. How about the productivity? this is the growth of labor productivity by sectors for Taiwanese firms, 1979 to year 2005. And here is the whole industries. This is for agriculture, this is for industry, this is for manufacturing, this is for service industries. And you can see that the number of manufacturing on their labor productivity, okay, is higher than the other two. It's higher than the other two. This agriculture, this service sector. This number is higher than this one. It's also higher than this one. This number is higher than this one. It's also higher than that one. Okay, and for the 2000, after 2000, as you can see, after 2000, increasing the momentum with trade with China. This number still higher than service sector. This number, okay, this number is okay. This number slower than the agricultural sector is because in under 2001, as I mentioned, it's actually entered a recession. So all recession is detrimental to the manufacturing sectors. So you can see manufacturing sectors does not perform as well as before. But however, you can see that service sector actually suffers most. So it is the service sector who actually decline in their productivity or in slow growth in their productivity. The productivity is not growth enough. It's not manufacturing. So a lot of people blame that the backward, the slowdown of Taiwanese economy after year 2000 is because our investment in China, right? You can see a lot of this kind of argument. The slowdown of Taiwanese economy since year 2000 is mainly due to our heavy and reliance and dependence on Chinese market and investment in China. But as you can see, our major investment in China is in manufacturing, not in service. Okay, and you can see manufacturing still remains a higher productivity growth than the service sectors. So it is not. So the slowdown of our economy as a whole, for the whole economy as a whole, slowdown. Okay, you see this number compared to this previous number is a significant slowdown in our productivity after year 2000. And the last slowdown, as you can see from here, is not due to the slowdown in manufacturing. It's not to blame the manufacturing which has a higher dependency with mainland China. Okay, so a lot of argument arguing that it is because we have a huge reliance on mainland China and has a lot of investment in there, and therefore it causes industry hollowing out, therefore it drags down the economic development of Taiwan. But if you look at here, it's not. It is the service sector which makes the major slowdown in the whole economy productivity. And that's why I'm saying that we have to restructure our service sector. It's more important. We shouldn't blame on our manufacturing sectors or those firms or those industries that has a closer tie with mainland China, because they are actually doing pretty well. They are not the burden of the economic development, and actually they are keep maintaining their growth momentum. And this is the productivity change in manufacturing. Sorry for these different Chinese characters. Okay, this is the productivity in manufacturing for these two-digit industries. And you can see that the highest growth, they are all subject to negative and positive growth, right? The highest growth is in this category, right? 2.2, and even this 9.44. What's this 9.44? The highest increase in productivity. And also this one, precision and medical machinery and precision optical and medical equipment. Here, this one, which is this one? This one is electronic component, and this is the one that I'm saying, the upstream key components. Okay, produced in Taiwan and export to mainland China. So these industries, which actually experience a large growth in their productivity. And the next one, this one is computer and communications. And this one is the electric machineries. So these three is what we call IC-related industries. And these three is the industry that invests the most in mainland China. And they actually have had the largest increase in their productivity. So this actually tells you that our foreign direct investment in mainland China does not hollowing out our industries. In fact, it helps to facilitate, to enhance the productivity of our industry, especially in IC-related industry, which happen to be the largest investors in mainland China. Right? So this should be clear evidence to show you that our foreign direct investment is not a killer for the slowdown of the Taiwanese economy since year 2000. And if we make an analysis on the productivity of manufacturing sectors, okay, by ranking, this is in 80s, this is in 90s, okay. In 80s, this is the three: computer, telecom, communication, these electronic components, right? Electrical machinery, right? These three. You can see in the 80s, electrical machinery is number one in ranking in productivity. And the computer and telecommunications is number 4. And the electronic components is number 8, right? But in the 90s, computer and telecoms ranked 1. Electrical machinery ranked 2. And electrical components ranked 3. So the first three top productivity, the growth of productivity fall into this IT-related industries. Okay, so you can see from here, actually, it is those industries that benefits from investment in China. So industries like computer and information industries, the IT-related industries, which have largest amount of FDI in China, they tend to have higher productivity. The advantage of international division of labor brings technology upgrading of domestic high technology industry. So the foreign direct investment actually helps Taiwanese firms and also helps the upgrading of the Taiwanese domestic industries. And here show you the labor productivity, okay, of manufacturing with respect to service sectors. That's this labor productivity. And here is the investment of Taiwanese firms in mainland China, the share of investment in Taiwanese firms in mainland China. So how close these two curves together? The more we invest in mainland China, the higher our labor productivity in manufacturing. So that's the first thing that regarding about foreign direct investments on industry's productivity. It shows no signs of hollowing out in the industry. If we hollowing out the industry, it means that industry becomes slow down and becomes less and less productive, right? But this is not the case. Actually helps to strengthen this IT industry in Taiwan. So that's the first thing regarding about its effect on productivity of the industries. And second thing is on unemployment. A lot of arguments saying that because we invest abroad, therefore it distracts most of the job opportunity in the domestic market, and therefore it increased unemployment rate in Taiwan. And indeed, unemployment rate in Taiwan increased after year 2000. So it is China to blame, right? To blame China, it is because we have too close to China, and therefore it caused our slowdown of our industry, hollowing out of our industry, and also increased the unemployment rate of our industries, of our countries in Taiwan. That's the major argument to observe, especially for those who are against China, right? ideologically against China. Anything to do with China, they always against it. And for those people, they always like that kind of argument. So we would like to see what happens, what's the effect on unemployment. So the argument will be whether it's a deindustrialization or hollowing out argument, right? Deindustrialization is pretty clear because the share of GDP declined. The share of GDP share of manufacturing declined over time, right? It reached top and then declined over time. So this is indeed a deindustrialization, no doubt. Just like any advanced economy in the world, they all encounter this deindustrialization. The share of industry or manufacturing sectors decline over time. And we see these decline over time. Now it's close to 20%. Used to be about 39% or 38%. Now it dropped to a little bit over 20%. After where? After mid-80s. So that is clear a sign for deindustrialization. Right? How about unemployment rate? If you compare those periods of unemployment rate, you find one thing very interesting. If you look at later part in here, yes, it declines, right? But unemployment rate increased. Right? So here not only deindustrialized, but unemployment rate actually increased. Especially after year 2000, increase in unemployment rate. But if you look at that is in the mid-90s. If you look before mid-90s, what happened? You see, deindustrialization, but unemployment rate is actually declining at the very beginning. Right? Unemployment is declining, while the share of manufacturing is also declining. So how to reconcile these two completely different results? One is that deindustrialization, but there's a decrease in unemployment rate. Keep the deindustrialization, then we have increase in unemployment rate. So can we say this deindustrialization caused the increase of unemployment rate? Because the industrialization starts in here. And in here, you see the unemployment is declining. Not until in here, unemployment starts to increase. Right? So we have to further examine whether the industrialization caused the increase of unemployment. The increase of unemployment rate, yes.
Could you maybe explain that by exogenic shocks, like the stories of the internet bubble, or I don't know, 9/11, all those
in here.
things?
Here, as I told you, here in this year, this particular year, especially up to 2000, is the global recession, the dot-com, the bubble, dot-com bubble. So that caused economic slowdown and therefore unemployment rate increase. And it has nothing to do with deindustrialization because deindustrialization is already starting with more than 10 years ago. Okay, and here it's actually moderate decline. Here you have a sharp decline in here, not in here. Okay, and during this sharp decline of the deindustrialization, actually the unemployment rate is actually declining instead of increasing. So it is hard to actually look at it. Even you look at these two curves, it's hard to justify that it is because deindustrialization caused the increase in unemployment rate. And as you can see, this sharp increase in unemployment rate is nothing to do with the deindustrialization because it's already close to a pretty level off the trend. Actually, this is mainly due to what you just mentioned about the external shock to the slowdown of the global economy. So everybody suffered, and Taiwan, of course, also suffered and the increase in the unemployment rate. All right? So even from this pure diagrammatic analysis is not precise that you can make that kind of argument that deindustrialization leads to the increase in unemployment rate, but we still have to provide some more solid evidence to see what's actually happening. So does the FDI cause domestic unemployment? In 86 and 95 period, the GDP share of manufacturing industry in Taiwan dropped significantly, right? At the average annual growth rate of 4.39%, entering the stage of so-called deindustrialization. No one will argue that. Yes, it's the deindustrialization process. But however, the unemployment rate in this period declined at an average rate of 4.46%. That's why I just now shown you by words to compare with the diagram that we have. It actually starts its decline at the very beginning. The shrink of the manufacturing only caused moderate decrease of employment level by average of 0.15% per year, while the employment level of service industry grew by 4.19% per year. So it's hard to argue that deindustrialization caused unemployment increase. But in 1996, as the share of manufacturing kept decreasing, the unemployment rate started to rise, especially in the period of 2001 and after. It reached average of 4.66% annually. In the period of 2001 and 2005, the share of manufacturing kept declining at an average annual rate of about 2.09%. But the employment level of manufacturing increased. The employment level at this period actually increased by a moderate 0.55% annually. As for the service sector, its GDP share increased at an average annual rate of 1.24%, and its employment level grew at only 2.11% annually. So it means that manufacturing sector is not the sector to blame the increase of unemployment. It is because service sector, the increase in the service sector does not generate enough job opportunities for the economy, which leads to, together with the global economic slowdown, generates the high unemployment rate for Taiwan. So you see, this is China, this is Taiwan, to get compared with other countries, okay, in different years. And what manufacturing sector actually creates jobs, the annual growth rate of the jobs employed in manufacturing sector. You can see this is China. Compare with other, this starting from year 2001. Every economy except Germany, okay, but Germany also suffered later, okay, all encounter negative growth mostly for most of the economy after year 2000. Even starting with year 1999, starts with negative. But what happened to Taiwan compared to Taiwan compared to others? We have a negative, as I told you, a negative in year 2001 because of economic slowdown. Everyone is mostly F negative, but our negative number compared with most of the developed countries actually smaller. And more important, we start to have positive. In year 2003, we recover very fast compared to other economies still negative. Okay, so you can see the manufacturing is not the sector to blame for the cause of unemployment. Actually, Taiwan's manufacturing sector outperformed any other country's manufacturing sector in the developed advanced countries. In most of the advanced countries, Taiwan actually recovered pretty soon. Recover to provide a good job opportunity for the workers in the manufacturing. So it is not the manufacturing to brand off, and it is the manufacturing who has the largest investment in China, and they are not the scapegoat. Okay. So the higher unemployment rate in Taiwan since year 2000. The decline of manufacturing and the rise of FDI does not cause the hike of domestic unemployment. It is the structural change towards service-oriented economy and the service sector does not create enough jobs, new jobs, opportunities, which results in higher unemployment rate for the whole economy. In the long run, the development of service industry from traditional one toward more modern services, including producer services, professional and technological services, tourism, medical services, education, those are so-called modern service sectors, is the only means to reduce unemployment rate in Taiwan. So in the long run, the solution to reduce this unemployment rate is not to rely on manufacturing sectors. They are still doing pretty well, and they also provide sufficient job opportunities compared with other counterparts in developed countries. It is the service sectors that we have to have some kind of reform to provide some new jobs for the economy, and that new jobs should be generated from the modern service sectors. From the modern service sectors. Okay? So that is the problems on unemployment. Okay? That's the problem for unemployment. So we have the effect of FDI on industry's productivity, on the unemployment rate of the economy, and the next is on what? On the domestic investment. Well, our foreign direct investment, so only we will take a short break and we'll be back, is that the domestic investment, where your investment abroad crowds out our domestic investment. Another argument is indeed in here, okay? Another third argument, which is also very important to look at, is that the more we invest abroad, we will not crowd out our domestic investment, which means that when we invest abroad, then we do not have enough funds to invest in our domestic economy. And because we do not invest in our domestic economy, therefore, because our domestic economy slows down, and therefore, the slowdown in the economy has a detrimental effect on the unemployment rate as well, right? So the slowdown of the economy is because the domestic investment decline, and the major reason for domestic investment decline in domestic investment is because our outward foreign investment abroad. So that would be also another important effect to look at, whether that has anything to do with the decline in domestic investment. Okay, so we will discuss this, and let's take a short break. So, on the following, we would like to discuss the effect of our foreign direct investment on domestic investment. So the first question that we would like to ask is that, does FDI crowd out domestic investment? Between 1986 to 2000, gross domestic fixed capital formation grew at average annual rate of 10.40%. Okay, so it's a remarkable growth rate for the fixed capital formation. That's the capital accumulation. Okay, but between 2001 and 2005, it dropped to negative 0.56%. For manufacturing, okay, it grew at 14.5% in the former period, in 86 to year 2000, and at the later period it grew at negative 0.72%. Okay, so it is pretty clear that the capital accumulation dropped, and also the manufacturing production is also dropped during the later period after year 2000, right? So that caused another problem, is that does this our foreign direct investment in 90s cause the slowdown or the decline in the domestic investment, in particular after year 2000? Okay, obviously before year 2000, FDI of manufacturing industry did not crowd out domestic investment, right? Because before year 2000, the domestic capital accumulation actually grew at a 10% growth rate. So obviously, it did not crowd out domestic investment. Instead, it crowd in domestic investment. Crowd in means that it actually helps to accelerate the investment of capital. After year 2000, the share of FDI in China surged, okay, and investment amount rose from 300 3,100,000 per case in year 2000 to 4,630,000 per case in year 2005, and the domestic investment slowed down. Okay, so the foreign direct investment surged in China while the domestic investment slows down in Taiwan. So while FDI and the domestic investment showed positive co-movement before year 2000 and negative co-movement instead after year 2000. So how to explain this obviously opposite correlations between the two series or between the two variables? Again, international division of labor matters in here, and which can actually provide a reason for that. Traditional industry has a short supply chain, right? So traditional industry has a short supply chain, and the foreign investment allows domestic firms to utilize horizontal division of labor, i.e. domestic firms produce high value added products, and the foreign firms or subsidiaries in the foreign country produce low end goods. Okay, because of the short supply chains, so through foreign direct investment in the traditional industries, you can have this kind of domestic firms focus on the same product but with different value added. Okay, domestic firms focus on high value added products, traditional products, while foreign firms or subsidiaries, they focus on low-end products. It's still the same type of traditional product. That's why we call horizontal division of labor. As for the high-tech industries, they have a long supply chain. You see, high-tech industry from the chips and then to the final products, it has a long supply chain. It has a lot of components. Okay, so foreign investment allow firms to utilize vertical division of labor, because the long supply chain, therefore you can utilize vertical division of labor, which means that the upstream industry like R&D and the key components, they were produced in Taiwan, while the downstream industry like productions and assembling in China. That is what we call vertical division of labor. So due to different property of industries, they have different types of division of labor. That is mainly due to the supply chain differences. Okay, so this is what we call international division of labor matters for the strategy of their depends on different industries, properties. No direct links, and moreover, the restricted trade policy does not allow to have any direct links between Taiwan and China. Okay, so no direct links, and the prohibition of direct flight, right, and no direct flight between Taiwan and China hinders international division of labor across strait. Restricted trade policy actually imposes a transaction cost. That transaction cost against this division of labor, either vertical or either vertical or horizontal division of labor. Because this restricted trade actually imposes a kind of transaction cost, okay, and which gradually results in complete hollowing out of the high-tech industries. That's my argument in the previous. Because in order to realize this, but government policies actually does not favor these kind of operations. So the best way to do is to move in all these, instead of division of labor, but move all the operation process abroad to access the market, local market, which is the Chinese market in China. So this actually has encountered the problem of hollowing out of the high-tech industries. We can use an intra-industry trade index to measure this division of labor, either horizontal or vertical. This is the formula for the intra-industry trade. Okay, intra-industry means the same industry, but we have trade. Okay, it can be upstream, downstream, and it can be also same industry with different high-end and low-end products. So it can be vertical, it can be horizontal. And this intra-industry trade has a formula that we have export of this industry. I means industry. Okay, export plus import minus the absolute value of export minus import. It's export plus import. Export minus import divided by export plus import and multiplied by 100. Therefore, it's the index between 0 and 100. When we have only export, if we have export, but more import, export but no import, right? It means you only export, you have no import, no intra, no trade between the same industries. Then what happens? This is 0, this is 0, this is 0, and xi minus xi is 0. Therefore, you end up with 0. So when you have a value 0, or less than 0, between 0 or less than 25, then we say that it's a high vertical division of labor. And if you have a number of close to 100, close to 100 means it's equal to 1, then if you export equal to import, then this term drop out, right? And this term divided by this term then equal to 1, so it's 100. So if that number close to 100, then it means that high horizontal division of labor means that you have homogeneous products with the keen competitions, high horizontal division of labor, because you're producing same types of products. And in that case, then it's a high horizontal division of labor. So you can actually compare these different, calculate this different index, and you will find a number between 0 and 100, and different number has different meaning. And if any meaning, so you can take here, any value below 50 is a vertical division of labor, and below 25 is a strong vertical division of labor. And above 50 then is a horizontal division of labor, and larger than 75 then is a strong horizontal division of labor. Okay, so horizontal division of labor, strong horizontal division, you compete to each other. So xi minus export and import, about the same. So it's close to 0. That's close to 1. Okay, so you can calculate this and use this index. When we say vertical division of labor, it's two kinds of product. It's upstream, downstream. They are complements. They are not substitutes. They are complements each other. So this number is close to 0 because they complement to each other. Therefore, your export and your imports therefore you actually does not actually import this, because you are doing upstream, therefore you do not import any upstream. You actually export upstream, but no import of upstream. But for the downstream, they only import downstream, but they don't export downstream, right? So you can see here, if import equal to 0, then if you have this number, you have this number equal to 0. Okay, so actually it's a vertical division of labor. You export, you export your downstream, and you don't import your downstream. You don't import the upstream, so it's a complementary. So you can calculate the numbers in here, right? X is fx equal to m, then it's 100. So implying similar products being traded within industries, in the industries. So it's strong horizontal division of labor, and that is more competition. And if x is far higher than import, or this import is close to 0, then this IIT is equal to 0, implying a strong vertical division of labor. Okay, you only export, you don't import, because you divide these goods only produced by you, so you don't import these goods. Okay, so it's a vertical division of labor. So by using this index, we can calculate. Okay, this is another index. Another index is called RCA, is reveal preference or competitive advantage. Okay, the previous index is to test whether what kind of trade relations is a vertical division of labor or a horizontal division of labor between the two trading partners. And here is another measure to see whether you have the competitive advantage on this particular type of products. If this number is greater than 1, then we say that you have competitive advantage. Okay, because you can see that these figures is the RCA of country I with respect to days on what? On the I is the industry for Taiwan. Okay, I is the industry. Okay, in Taiwan or in China, and the J is for the U.S. market or the Japanese market. So by reveal preference is to see whether this industry, which country, either Taiwan or China, has their competitive in United States market or U.S. market, or the Japanese market. Okay. So for example, in Taiwan, for example, Taiwan, if this is Taiwan's exports, okay, Taiwan's export to, if this say is United States, okay, Taiwan's export to United States relative to China's export to United States, for example. China's import. Okay. And here is Taiwan's export of these particular goods in U.S. market relative to Taiwan's total export. This is Taiwan's total export in U.S. market. This is Taiwan's export of this state I product in U.S. market. Okay. So if this number is strong, it's high, larger, then what is this number? This number is in the U.S. market imports. This should be same, okay. Taiwan's export in this time market in terms of Taiwan's total export, okay, to the import of these items with respect to total imports. And if this number is greater than 1, here is a value, okay. Anyway, if this number is greater than 1, far greater than 1, then it means that you are more strong in exporting this type of product. Therefore, it it actually reveals that these exports, the country in this export has a competitive advantage. Okay? So if this RCA value is greater than 1, here 1 is in here, okay? Taiwan's industry I has a moderate competitive advantage in the US market. If greater than 1.25, then we say that it's a stronger competitive advantage. If less than 0.8 or less than 1, usually we take 1 as a threshold to see. Under 1, then we say Taiwan's industry has a weak competitive advantage. Okay, so RCA value, if you have RCA value other than 1, from here you can see that your export in that foreign markets, you have a competitive advantage. Then the goods that you import from that country. Then each country compare these particular numbers. If you have a values greater than 1, then we say that the country has a competitive advantage on that particular one. So we can calculate the number for each item of export to see whether this export has the RCA value greater than 1. If that value greater than 1, then we say that this export has a competitive advantage for this particular economy. So the interpretation is that numerator is the Taiwan's export share of product I in the U.S. market, right? And the denominator is the U.S. import share of products. U.S. import share of products. Then if the numerator is greater than the denominator, if the numerator is greater than the denominator, that means RCA is greater than 1, right? And then we say that the Taiwan is greater than 1, then we say Taiwan has a competitive advantage on that particular product in the U.S. market. Okay, because the numerator, the numerator is export, denominator is import. So if your value greater than 1, it's that you are more strong in export. So we say that you have a competitive advantage in that particular good. So we can see this competitive advantage by viewing this RCA. Okay, and you can see that this is for IT, electronic machineries. This is the HX code, okay? And this is the furniture. This is toy, plastic, machinery. This is electric and electronics. You can see this number. RCA is this. This is RCA value. Okay, this is steel. RCA value for electronic products always larger than 1, and it's increasing. The number is increasing greater than 1, and it's increasing over time. So it means that Taiwan has a competitive advantage in this electric and electronic products. And that happened to be the product that we had a huge investment in China, right? And steel is less than 1, 0.21. And steel less than 1 until 0.4, then we start to have competitive advantage in this steel. Otherwise, it's always mostly less than 1 in steels. And in furniture and toys, as you can see, we used to be greater than 1, right? 3.2. But that number is declining over time. It means that we're losing our competitive advantage over time. We still have a competitive advantage, but the degree of the competitive advantage declining over time is pretty clear for furniture. For toys, the same thing, declining over time. Okay, but still, we're still having competitive advantage in the year 2005. Okay, and plastic products still have some competitive advantage. So is the machinery. That's the one that Taiwan has the strong competitive advantage. Okay, and this IIT, okay, IIT is the intra-industry trade, right? The industry trade, as we have, the number should be closer to 100, will be horizontal. Close to 0 will be strong vertical, right? So you see the number is smaller, and close less than 25. So it's vertical division of labor, right? So for electronic products, Taiwan and China actually has a strong, and it becomes stronger and strong because closer, smaller and smaller, closer to 0, right? And closer to 25, right? So it's a strong vertical division of labor between Taiwan and China. In what? In electronics and electric products. And that's the product that we have a heavy investment in China. So that reflects my argument that it's a strong vertical integration. Okay, it's a complement between Taiwan's IT industry and China's IT industries. Okay, but that case is not the same in furniture, right? It's over 70. So it's a vertical integration. It's competing each other in this furniture. So it's the toys, close to 100. It's competing. It's still competing. 1998. So in these type of products, they are competing in these final ends of their products. Okay. So by looking at IIT index and RCA index, we will be able to see which country has the competitive advantage in exporting what kind of product, and also in exporting this kind of product, what kind of division of labor, the relations between the two sides in terms of their division of labor, whether it's a vertical division of labor, which means that they are complements to each other, or it's a vertical integration, a vertical division of labor such that they are competing at the final end product. So you can be able to justify and to say something regarding about your relationships with your trading partners. Okay, so we can do this kind of calculations and using the quantitative analysis to see what kind of relations between Taiwan and China. And that justifies our argument that in terms of IT products, they are vertical division of labor, and Taiwan has a strong competitive advantage in exporting this type of product. So investment in China actually reinforces the process, not weakening the process. So conclusion. Though the share of manufacturing is declining, all right, the share of manufacturing is declining, the productivity of manufacturing kept upgrading. FDI in China does not lower the productivity of Taiwan's manufacturing industry. Deindustrialization, but not industrial hollowing out. I all provide evidence, and not just arguing for this. I provide evidence for these arguments. Restricted trade policy and investment policy to China hinder division of labor across the strait, because without this, we actually have the division of labor, and that division of labor is actually weakening after the imposing of restricted trade policy, and may marginalize Taiwan's economy in the long run. And we're glad to see that in 2008, it's a second power turnover in Taiwan. Mr. Ma Ying-jeou won the presidential election. And after his inauguration, it immediately announced that cross-strait relationships should be improved by start with the red link, right? We have no link, not the red link, but it start to have the red link, direct flight with mainland China, and in last year, even end up with signing the ECFA to formalize the institutional arrangement, to formalize the de facto division of labor or trade and investment relations between Taiwan and China. And I believe that's the right step, because it makes the two sides under a more clear institutional arrangement, under a more transparent framework, and that will be able to help Taiwan's industry to further emphasize on what is our relative strength, and we should keep our strength in our country and make the best use of Chinese market, and such that Taiwan will be survive and sustain its long-run growth. So that is a very important step towards Taiwan's relations with China, and we firmly believe that we have to maintain a normal relation in terms of trade and investment. Okay, and instead of just purely against Taiwan's between China. And of course, I will also mention about this later, and I think I also have this kind of argument before, is that we cannot only rely on China only, right? We cannot put all our eggs in one basket, right? So of course, definitely we cannot only rely on our China. That is why I'm saying that it is also important after signing the ECFA is to have further free trade agreements or institutional arrangements with our neighbors in the region. We have to be able to participate in the regional economic integration, such as the process of ASEAN Plus. Okay, such that we can enlarge our domain of our trade and investment or economic cooperation, not only with China, but with the rest of the economy in Asia, and be a member, participate in the regional cooperation. And in that way, then it will further consolidate the economic development of Taiwan. And of course, that will weaken the threat of heavily relied on Chinese market. But it's the first step. We have to improve our relationship with China first, such that we will be able to build a better relationship with our neighbors in the region. Because all the neighbors in the region, they pay much attention to China and to Taiwan. And of course, we have to improve our relationship with China first. Okay? So ways to avoid being marginalized is very important for Taiwan at this present stage. Establish normal economic and trade relations with China and actively engage in the process of East Asia economic integration, especially with ASEAN. It's very important at the current stage. Indirectly, build an FTA with the U.S., as the U.S. is the largest exporting country for Asia's economy. And it is also not in the U.S. interest to see Taiwan being marginalized. Therefore, we should actively seek the possibility to have FTA with the United States. And that is currently our very important policy. Okay, and the U.S. is our in the past has been our long-term allies in terms of trade and investment, and of course, definitely we should keep building this good relationship with the United States. No, United States always hesitates to sign FTA with Taiwan. They hesitate to do that in the sense that they think that it's not hesitate. It's not in a hurry for them to do this. Okay, but from Taiwan's perspective, we are more eager to have this with China, with United States. But the last time, the issue of the U.S. beef, you see, it's become an issue in the sense that this kind of make out beef, right? These kind of issues that we don't think that we should import the U.S. beef, because according to our own safety and food regulations, we don't consider U.S. beef as safe as as the Australian beef, for example. So we hesitate to open up our market to import those US beef. But of course, under pressure, as you can see, Taiwan make a concessions and then actually allow US beef to import to Taiwan. But that makes a big issues in the private sector. Okay, so even that particular import of beef already caused this kind of problem. How can we go one step further to discuss FTA? FTA involves more than just import export of beef. Okay, so you can see it's still it's a process. So now we focus more on investment, not on trade, on investment. So we have so-called TIFA between Taiwan and the U.S. talking about the institutional arrangement between the two sides. Investment focus major on investment issues. On investment, it's easy to solve. Then on trade, okay, trade you have more trade conflicts between different sectors. Okay, so now the most likely arrangements or agreements to be signed between Taiwan and the United States is the TIFA, the so-called investment arrangement. Okay, and third argument is also very important, is to construct Taiwan as the regional operation center. Why I call you regional operation center? Because in the past, Taiwan has a strong and also abundant experience in internationalization of the economy, because Taiwan is a small and open economy, and we have been so internationalized in the sense that we have more than any other countries in the region, just about the same as Korea, right? Only next to Japan, so to speak, but much far advanced than other Asian economy in terms of internationalization. Okay, so we know how to coordinate resources in the international market. So as a regional operation centers and as a base for resource coordination for the regions and the management in the East Asia, Taiwan can play this important role to help the region, and that will also avoid Taiwan being marginalized, but also help the regional economic cooperation. So in this aspect, Taiwan should participate more in the region. But of course, our neighbor in the region should also recognize the necessity to have Taiwan involved in the regional cooperation. And the other things that here doesn't mention, but I mentioned in some other place, is that Taiwan can also be a risk buffer. A risk buffer for what? For any economy who want to enter Chinese market. Because as you know, China is a market-oriented, but a socialist market-oriented economy. So it's still central planned and central controlled economy. It is Communist Party dominates the political as well as economic decisions. So there is a lot of uncertainty involved. And Taiwanese firms has a lot of experience dealing with China or Chinese firms. So we know better, and we speak same language, we have the same culture. So we know how to do business with Chinese. So for any foreign country who want to penetrate the Chinese market in the future, they should seriously consider Taiwan as a stepping stone, or as a gateway, or as a risk buffer entering Chinese market. And they should take advantage of this. And in that perspective, Taiwan can still play a very important role for the rest of the world, aiming at Chinese market. Okay, so in this regard, again, is a way to avoid being marginalized. But at the same time, it's not only for our own sake, it's also for the benefits of the region and also for the rest of the world. For the rest of the world to deal with China, and Taiwan can play such an important role. Okay, I believe this is the last one. Yeah. Okay.